Wirecard was exposed as a multi-billion-dollar fraud. The ghost money was only the beginning. This is the story of a CEO who thought he was a god, and a COO who was likely a Russian spy. They claimed to be the future of finance, but their real business was fiction. In 2020, the mask slipped, and 1.9 billion euros evaporated into thin air. But where exactly did the money go? The truth is far more sinister than a simple accounting error. Germany is a land built on the myth of precision. We think of German engineering and we think of something unbreakable, something clinical, something honest. It is the land of Mercedes, of Siemens, of the Mittelstand. So, when a small company from a sleepy suburb of Munich called Wirecard began to conquer the world, everyone wanted to believe the miracle was real. By 2018, Wirecard had done the unthinkable. It kicked Commerzbank, a pillar of the German establishment, out of the DAX 30. That's the elite club of the 30 most valuable companies in the country. It was a symbolic execution. The old dusty world of traditional banking was being murdered by the new, sleek world of fintech. At the head of this revolution was Markus Braun. Braun didn't look like a banker. He spoke in grand, pseudo-philosophical sentences about the digitization of the human experience and the death of cash. He was the archetype of the tech visionary. We could call him the German Steve Jobs. Under his leadership, Wirecard wasn't just growing, it was exploding. While other payment companies were fighting for scraps, Wirecard was reporting profit margins that defied the laws of physics. They were processing payments for everyone, everywhere. They were the invisible plumbing of the internet, and as the stock price climbed from 20 euros to nearly 200, the FOMO set in. Investors didn't care how the sausage was made, they just saw the line going up. But there was a dark secret at the heart of the miracle. Wirecard didn't start in the shiny halls of high finance, it started in the gutter. To understand the fraud, you have to understand where the blood started flowing. In the early 2000s, the internet was a digital Wild West, and most banks were too terrified to touch it. They didn't want to process payments for the unmentionables, online gambling and pornography. The big banks were worried about their reputations. Wirecard didn't have a reputation to lose. They stepped into the void, becoming the primary toll booth for the world's vices. Every time someone in a dark room clicked pay on a porn site, Wirecard took a cut. Every time a gambler chased a loss on an offshore site, Wirecard took a cut. It was a gold mine, but it was dirty. And Markus Braun knew that if he wanted to be a titan of the DAX 30, he couldn't just be the porn king of Munich. He needed to legitimize the business. He needed to wash the company's image until it shone. So, he began a massive campaign of acquisitions. Wirecard started buying companies all over the world. In India, in Singapore, in Dubai. On paper, it looked like a global empire. In reality, it was a shell game. They were buying obscure companies for inflated prices, using the acquisitions to hide the fact that their core business was still tied to the murky underworld of the internet. But as the company grew, even the porn money wasn't enough to sustain the growth the stock market demanded. They needed more. They needed a miracle. And since they couldn't find one in reality, they decided to invent one in a spreadsheet. Before we get to the how, we have to talk about the why. Every great fraud requires a villain, but in the Wirecard story, the villain isn't just a person. It's an abstract force, the culture of ego and arrogance. This was a systemic wall of pride that protected Wirecard for over a decade. It was built on a simple, toxic idea. We are the best, we are the smartest, and anyone who questions us must be a criminal. The German financial regulator, BaFin, became the chief architect of this wall. They were so desperate for a German tech success story that they became Wirecard's de facto security team. When journalists pointed out that Wirecard's numbers didn't make sense, BaFin didn't investigate Wirecard. They investigated the journalists. Then you had the auditors at EY. For 10 years, they signed off on Wirecard's books. They were the gold standard of truth. But as we would later find out, their auditing consisted of little more than glancing at photocopied bank statements and nodding. This culture of arrogance created a reality distortion field. Because the company was so successful, it had to be legitimate. And because it was legitimate, any criticism was seen as a malicious attack by foreign speculators who wanted to destroy German prosperity. It was the perfect shield for a predator. So, how do you fake nearly 2 billion euros? You don't do it with a giant pile of counterfeit cash. You do it with third-party acquiring. Think of it like this. Imagine you have a lemonade stand, but you don't have a permit to sell in the next town over. So, you tell a friend who lives there to sell the lemonade for you. He takes the money, keeps a small fee, and tells you he's holding the rest of the profit in a safe for you. Wirecard claimed they did this on a global scale. They said that in countries where they didn't have licenses, they used partners to process billions of euros in payments. These partners, located in Singapore, Dubai, and the Philippines, were supposedly making Wirecard incredibly rich. By 2019, these partners were responsible for over 80% of Wirecard's total profit. If you removed them, Wirecard was a failing business. But here was the catch. Nobody had ever actually seen these partners do any work. When researchers finally went to look for these multi-billion-dollar companies, they didn't find glass towers. They found a small travel agency in a shopping mall, a retired woman in a kitchen in Manila who had never heard of Wirecard, and empty offices and shell companies. To keep the lie alive, Wirecard told their auditors that the money from these partners, the famous 1.9 billion euros, was being held in trust accounts in the Philippines. They produced bank certificates. They produced letters from lawyers. But the visceral directness of the situation is this. The money was a digital ghost. It was just numbers typed into a screen by people who knew that as long as the auditors didn't pick up a phone and call the bank, the lie would live for another day. And for years, nobody picked up the phone. Every thriller needs a hero who is pushed to the edge of madness. For Wirecard, that hero was a journalist named Dan McCrum. McCrum, writing for the Financial Times, started looking at Wirecard in 2015. He didn't see a tech giant, he saw a house of cards. After he began publishing reports about round tripping, a process where Wirecard would send money to a partner, who would then send it back to Wirecard, pretending it was new revenue, Wirecard responded with total war, going beyond press releases to hire former MI6 agents and private detectives to tail McCrum, sit in cars outside his house, and attempt to hack his email. They even attempted to set up sting operations where people would offer him bribes to see if he would take them. McCrum was living in a spy novel. He was meeting whistleblowers in dark bars and receiving encrypted files from anonymous sources. He was being told that his life was in danger. But the most crushing blow didn't come from the spies. It came from the government. In 2019, BaFin issued a ban on short-selling Wirecard stock, claiming that McCrum and the Financial Times were conspiring with hedge funds to drive the price down. The German state was effectively saying that the truth was illegal. It was the lowest point for journalism in modern European history. McCrum was being treated like a criminal for doing his job, while the actual criminals were being cheered on the floor of the stock exchange. The end didn't come slowly. It came like a heart attack. In early 2020, under immense pressure, Wirecard was forced to appoint an independent auditor, KPMG, to find the missing money. KPMG spent months digging, and in April, they released a report that sent shockwaves through the market. They basically said, we can't prove the money exists, but we can't prove it doesn't exist because Wirecard won't give us the documents. The stock price tanked, but Marcus Braun, ever the arrogant visionary, told investors it was just a misunderstanding. The final curtain fell on June 18, 2020. Wirecard was supposed to release its audited financial results. If they didn't, their bank loans would be called in, and the company would be dead. The auditors at EY finally backed into a corner, did the one thing they had avoided for years. They sent a representative to the Philippines. They went to the banks, BDO and BPI, and showed them the documents Wirecard had provided. The bank officials looked at the papers and laughed. These aren't our documents, they said. These signatures are forged. These accounts don't exist. We've never even heard of Wirecard. The news hit Munich like a bomb. At 10:30 a.m., Wirecard released a statement. The auditor has informed Wirecard that no sufficient audit evidence could be obtained of cash balances on trust accounts in the amount of 1.9 billion euros. In plain English, the money was gone. The stock price didn't just drop, it fell off a cliff. It went from 100 euros to 2 euros in a matter of hours. Billions of euros in market value, money belonging to pensioners, retail investors, and banks, vanished into the ether. Marcus Braun appeared in a final desperate video. He looked like a man who had seen a ghost. He tried to claim that Wirecard was the victim of a massive fraud rather than the perpetrator. Nobody believed him. By the end of the week, he was in handcuffs. While Marcus Braun was being processed by the police, his right-hand man, John Marsalek, was busy becoming a legend. If Braun was the brain, Marsalek was the fixer. He handled the Asian partners, met with Libyan warlords and Russian mercenaries, and lived in the shadows, obsessed with the world of espionage. On the day the fraud was exposed, Marsalek told everyone he was flying to the Philippines to find the money and clear the company's name. He even paid people to fake his entry records into the country. But he wasn't in Manila. He had taken a private jet from a small airfield near Vienna. He flew to Belarus, and from there, a car drove him across the border into Russia. As the investigation deepened, the truth about Marsalek began to emerge. He wasn't just a crooked executive, he was likely a Russian asset. He had been using Wirecard's massive payment network to move money for the GRU, Russian military intelligence. He had reportedly been bragging about having the secret formula for the Novichok nerve agent. The 1.9 billion euros wasn't just a hole in a balance sheet, it was a massive laundry machine for some of the darkest forces on the planet. As of today, Jan Marsalek is one of the most wanted men in the world. He is living under the protection of the Russian state, a ghost who managed to pull off the greatest disappearing act in history, leaving behind a trail of ruined lives and a broken financial system. We want to blame Marcus Braun. We want to blame Jan Marsalek. We want to blame the incompetent auditors and the arrogant regulators, and they all deserve it. But there is a more uncomfortable truth. The Wirecard only worked because we let it work. The investors who saw the 100 times growth and didn't ask questions, they were complicit. The banks that lent billions of euros to a company that processed porn and gambling, they were complicit. The public that cheered for a tech hero without ever looking at what he was actually building, we were all complicit. We live in an age where growth is a religion and disruption is a prayer. We have created a world where a man in a black turtleneck can tell us a lie, and we will protect that lie with everything we have because we want to believe in the miracle. Wirecard wasn't a failure of technology. It was a failure of the human heart. It was a demonstration of how easily our greed can be weaponized against us. We want the shortcut. We want the magic of fintech to solve our problems. But there is no magic. There is only math. And if the math doesn't work, someone is lying to you. 1.9 billion euros. It's just a number on a screen until it isn't. It's the retirement of a factory worker in Stuttgart. It's the savings of a young couple in Berlin. It's the trust that holds a society together. The building in Munich where Wirecard once stood is still there. The glass is still shiny. The logo is still on the wall, but the soul of the company is gone, revealed as nothing more than a collection of forged PDFs and the arrogance of men who thought they were too big to fail. Marcus Braun is awaiting trial. Jan Marsalek is a ghost in Moscow, and the rest of the world has moved on to the next big thing, the next disruptor, the next miracle. But somewhere, right now, another executive is putting on a black turtleneck. Another company is reporting impossible profits, and another regulator is looking the other way because they want to believe in a hero. The 1.9 billion euros never existed, but the next time someone offers you a miracle, ask yourself, are you looking at the future or just watching another mirage powered by numbers? Because in the casino of global finance, the house always wins, especially when the house is built on nothing but thin air.